Justin Trudeau, tiny homes, micro condos, and where interest rates are going to go over the next several months. Yeah, all this and more with a good friend and mortgage broker, Mr. Dion Beg. Here we are, my friends, with our favorite mortgage broker in all the land, Mr. Dion Beg. How you doing, my man?
Cheers, Gary. I'm great, man. How you doing?
I am doing excellent, excellent. We've got some multimedia sharing we're going to be doing today. We're going to share some videos, some articles, and discuss what's going on in
I'm crossing the fingers that all the technology works today. I know it's not easy, but let's hope it works out.
you know what? It'll be a great video nonetheless. Nonetheless. Okay, my friend. So there's lots going on in our market here. We're kind of both you and I are somewhat situated in the GTA, although we have our ear to the ground kind of right across Canada. And there's almost like I don't, I hesitate in using this word, Dion, a pause, but maybe just a little cruise control. How's that sound as we lead into next month's
Well, it's true. I think most boards are reporting a real surprise in slowdown in the month of April, which is usually when things ramp up. So yeah, it's kind of unknown territory right now. I think a lot of people are still waiting for those rate drops. But at the same time, we've got a flood of listings, right? Which means the buyer should be in the driver's seat as long as the seller is willing to be flexible. And I think we're at that sort of standoff still, right?
well, here's the interesting thing. In most cases, and I know you and I have deep roots in our investment networks and so forth, and our investor clients, but the majority of all home buyers are end users. That is the
Hmm.
majority. And while I'll say 9 times out of 10, probably even more, sellers are also buyers. So
Hmm.
I think something's got to give here in a second, right?
Correct. And it's like everybody's trying to play chicken, but they need agreement in the market. Okay, it is a seller's market, so it is a buyer's market, so I'll sell a little for a little less and buy for a little less as long as the seller of my next home is willing to give. And I think that's the standoff right now.
Yeah, yeah. Okay, so we got a few special guests, as we like to say.
Sure, virtual guests, sure.
Yes, that's right. That's right. But why don't you set us up with the first one from
Well, let me just say, I guess the topic of today's conversation is affordability.
right.
And what Gary and I have done is we've put together a couple of videos or pulled some videos that are circulating online, which are right on this topic of affordability in terms of, how are people making things work and what might happen if Canada doesn't change path. So this first video is from a realtor who's based out of the GTA, who's very well known, I guess, in our industry, Daniel Foch. I hope I'm saying his name correctly there. And he was recently at a real estate event where he said something quite telling and compelling in terms of what the future of the GTA might look like. So yeah, let's play that and we'll have a conversation about it.
Thing that I think not a lot of people are thinking about is what does this look like at the end? When you're buying real estate, you're buying a lifetime asset, 25-year amortization at a minimum. What does this look like in 25 years? What does this look like in 30, 40, 50 years? I mean, that's the lifetime of buying a real estate asset. There's a chart, the OECD has this chart that shows home ownership rates by country. And there's a handful of countries to the left of Canada and a handful of countries to the right of Canada. And I would look at the chart and say, does Canada want to move left on this chart or right on this chart? And my perspective is that we are going to see a consistent decline in homeownership for the remainder of our lives in Canada, and we'll end up in a renter's economy, much like Germany, Switzerland. I mean, I'm a Swiss citizen, so I'm very familiar with this, and it's a very healthy economy. Young people, they're invest in things they're passionate about. They start businesses. They're not just pumping money into their houses. Like, there's a degree of specialization and division of labor where we should want large institutional landlords. We should want people like this in this room who want to be expert landlords, being housing providers, and people can be consumers of housing, and that's the end game that we're headed for. I think the sooner that you can go and look at other places in the world that have that example, you can start making informed investment decisions on how to get there.
Interesting. I like how he calls it the end game in a sense, right? And people don't think about that. We just think about we need to go buy a house because that's what our parents did, that's what our grandparents did, and that's what everyone else has done in a sense, right?
Yeah, so a couple of key points there is that, basically he's saying with the way that affordability is going, that it's possibly the case that going forward we will have fewer home buyers than historically was the case, which means that your children and grandchildren may not have the house with a white picket fence that you aspired to have, and the idea there is that maybe that's okay, right? And I understand that position. I'd say a couple of challenges with that is that from a cultural perspective, the countries he referenced there, Switzerland, for example, has always been a country which has been somewhat more for the people, less capitalistic, still a capitalist society, but less capitalistic, right? And much more social. And what we don't have that history, that deep history, USA and Canada, more so USA, but North America in general has always been a capitalist region, right? And for us to now give up the idea that property ownership may not be for us, our kids, our grandkids, it will require a cultural shift as much as an economic shift. And when you try to do those two things at once, I think that sometimes is a little bit overwhelming for society in general, right? So logic, everything he's saying there is pure logic, makes a lot of sense. But then the implementation and how it rolls out in society, economics, culture, it'll be a challenge in my experience, in my opinion.
Yeah, yeah, for sure. And we, like I said, like we've somewhat been ingrained that property ownership is the only way. And there are other ways. And of course we're pro property owners, as it were, but we do see, well, we like to think that we see things from a broader perspective because we are providing homes and places to live or residence to those that aren't owners, right? We both, you and I, have tenants. So if that wasn't the case, we wouldn't be offering our homes up for rentals, as it were, right?
Yeah, correct. And I mean, the other thing there is that if what Daniel there is saying comes true, in that a couple of large institutions end up owning the rental housing stock, then my mind would be, well, I want to be a person who owns those types of assets, so that in the event that the BlackRocks of the world come out and say, look, I want to buy all the single family homes in the GTA, I'd like to be an owner of those assets so that I could potentially sell to that end user who actually might be an investment corp, right? If we're going really down this rabbit hole, then is that potentially the future? And as such, wouldn't you want some chips on the table when that came your way?
Yeah. Yeah. It's the
Right.
whole, it's kind of like along the lines of, if I know a development's coming, I want to buy the house that's kind of in the way of that development, right? I mean,
Correct. Correct.
that's a weird
Yeah,
way.
and
That's
historically, Gary, that was we had to own a large tract of land or some housing near a central transportation hub. But going forward, it may not be that specific. It may just be you happen to own real estate in a desirable city in North America, right?
yeah, yeah.
Yeah.
And there's a whole, and we perhaps should do a whole segment on this, on transportation. And there's a whole movement I know in Toronto and other major
Mm.
cities, eliminating the personal use of a car or the personal ownership of a car, and kind of living. If there's a phrase, and it escapes me right now. Is it
I
the
think
10?
is it the 15-minute city or something like that?
Yeah.
Yeah. Yeah.
So we're starting to see communities somewhat just shift and redevelop with that mindset. And we should
Oh,
probably
bro. Can you
that.
imagine? Earlier, I was talking about a cultural and societal shift. Can you imagine taking a North American's car from them? Like, if we're talking about social, cultural shift, that's going to be one of the hardest because ultimately, a car equals freedom to many North Americans.
Yeah, I always laugh, whenever we go over to Europe, and especially Europe, and you see a big, we'll call it big American pickup truck.
Yeah.
Um, it's like four times the size as any other vehicle, right?
Oh yeah, and I mean I'm from originally from Australia, and even I was surprised at the size of cars in North America, in Canada. Going to Loblaws and going grocery shopping and seeing the woman throw her groceries in the back of the truck, going, "Why do you need an F-350 to pick up your groceries?" Right? Just because I can, right? And
Yeah,
I mean, on the flip side, and we might talk about this a little later in today's episode, Gary. As much as I say a car equals freedom, on the flip side, the car payment equals you being chained to that payment, which is the opposite of freedom, right? When it comes to the economic side of things.
you're right. And let's circle back to that towards the end of the
Sure.
conversation. That's a good future segue. Okay.
Mhm.
Let's lead us into, we've got a couple of videos here based on affordability. And of course, with that said, your mind goes to, well, if I can afford something, perhaps we need to look at smaller units. And we've got some things here. So let's look at the
Yep.
first by
Sure.
by Mr. Justin Trudeau.
Okay. Right. Yeah. This one's been
Yeah,
doing the rounds on the socials.
yeah, yeah. Yeah. So here we go. Share my screen. Oh, what? That's the wrong one. I knew that was going to
No,
happen.
I think you got it.
I Wait. Hang on. We're getting. That's not it either. We'll get there. We'll get there. Hold up, my friends. Nope. That's not it. Here we go.
All right. Let's roll.
Let's roll it.
If I asked you how they build a house, what would you say? You'd probably point out they start by digging a big hole and filling it with bricks and mortar. You'd probably point out that it takes a long time. What if there was a more innovative way of getting housing built? I'm here at a modular housing factory where they're building the homes we need in a matter of months. Doing it with 3D printing and automation, also by using standardized blueprints that other builders can use too. They're literally mass producing the housing we need. That's the kind of innovation we need to solve the housing crisis we're in. These are the investments we're making in technology to scale it up and make it happen.
All right.
Okay. So, firstly, obviously, a campaign ad, right? So let's call it what it is. Yeah. Well, before I jump in, Gary, I got thoughts. What are yours?
Yeah, it's definitely a campaign ad. And he's absolutely right on one hand, where the prefab home does serve a purpose, and it has such a tiny, funny enough, tiny homes in some cases, tiny. It's got such a tiny share of the market.
Yep.
Uh, and we work. The brokers that I'm with, we actually have a really good connection with a prefab builder, and their doors are open, and they can bang these things out, as it were, incredibly quick.
Right.
Should communities and local communities look at this option? Absolutely.
But there's a lot of stigma around it, right? So you work closer with the home buyers. What's their feeling around living in a modular home or a prefab home, rather?
Yeah. And I'd say you're right. There is that stigma around it. And perhaps one of, oh, it's not as good as, or perhaps it's the quality is less. And if you spend, funny enough, and I didn't think we would end up in this line of thoughts. If you spend any time with a prefab builder and actually perhaps even visit one of their factories, not only will they'll show you, and they will prove it, that the way that they build is because it's in a controlled environment.
Right.
You're going to get a far superior, in most cases, built home than
That's
the
interesting.
stick framing home, as we call it,
Right.
especially in the middle of winter. But they are incredibly beautiful homes. Spend some time looking at some. Nelson Homes, I'll drop the name here, is our preferred vendor when it comes to that.
Mm-hmm.
Believe if you were to look at their online without knowing that they were prefab homes, you would have not a clue. You wouldn't.
Okay.
Yeah.
Yeah, I'd
Yeah.
love to check them out.
Yeah.
And I guess what you said there, I never really thought about, in that because it's inside, it's been constructed inside inside a warehouse, you're not exposed to the elements, in particular snow and water, right? And rain.
Yeah.
So that means that potentially your structure is going to be superior.
Yeah, and that's kind of the idea behind it. The other factor is, once they have that foundation dug and poured, and some of the utilities brought into the site or sites, because the homes are all being built off-site and then being put together when they get to the location, they go up
Yep.
incredibly fast.
Right.
So for some, that's a great option, and there needs to be perhaps more emphasis on the prefab homes. I hate to say it, Justin Trudeau might have pointed us in the right direction. I don't think he's going to be the one that takes us in the right direction. How's that sound?
We'll see. We'll see. Time will tell, right?
Yeah.
But look, I'm happy to hear the positives, because if you were to look at the comment section in those types of videos, I'm sure they're all negative. Like, oh, they want us to live in dog boxes and these types of things. But then I guess it could potentially be from the person who hasn't had the education or experience that you've had to actually walk through these properties and see the structure. So for me, my gut immediately is like, oh gosh, really, are we going this way? But is that way a bad thing? And again, maybe I'm the ignorant one here, because immediately my mind goes to the negative. But if there's positive, then you know what? Maybe we really should spend some time on that. In fact, it might be an interesting thing to have somebody from those companies on as a guest in the future.
We definitely could. Yeah,
Yeah.
definitely could. The interesting thing here too is if we think back on modular homes or the trailer park, as it
Yes,
were.
that's where your mind goes. That's where everybody's mind goes.
And let's think about this for a second. When we hear of, hey, cool new trendy neighborhood on, we see it on YouTube or in one of the, Instagram reels or TikToks or whatever, tiny home communities. Well, my friends,
Yeah.
let's think about this. Tiny home is just a trendy modular home.
Well, here's my next question. Does a modular home necessarily need to be tiny? Right? Because I've seen some of these ones that were, and this is a little different, made from shipping containers, which are giant mega homes, 4,000 square foot homes, right? But yes, I think also we are expecting, a lot of people expect that their home should be 4,000 square foot, whereas your grandparents raised, 3 or 4 kids in a footprint of 1,000 square foot or 1,200 square foot. So it may not be necessary to the extent that we think. In the same way that the Ford F-350 may not be necessary, Gary.
That's right. Okay, so I didn't expect to go here, but I just pulled up Nelson Homes, and I'm just going to scroll through this. And
right
here, you just asked me.
Wow, look at that. That's a prefab home.
As a prefab home. And I could play
Right.
everything else, and we don't have time for that.
Sure.
But these are prefab homes.
Okay.
Prefab homes is not the stigma perhaps that you think it is. And they have sizes ranging from, I think it's about 600 square feet. So just as we're kind of all the way up to obviously what these
thousands.
Go look. Yeah. So go look for yourselves there, but that is something else, my friends. So there is a place for this market. And like I said, they have such a tiny market share in the new home construction that are going to be playing a bigger role, especially as cities and municipalities rubber stamp specific. We've talked about this in the past. Specific plans, and yes,
correct. You just mentioned that pre-approved blueprints, right? Yeah. So if those pre-approved blueprints are available across the board to prefab and regular construction builders, that really should expedite things, especially if you can fabricate in a factory exact same frame, et cetera, et cetera. Mass production basically is what we're talking about.
Yeah, good stuff. Okay, let's move on. Where do you want to go? We've got
let's go over to the condos now.
The condos. Okay, so this is pretty cool. I'm going to go to here, and we're going to look at condos on the smaller scale, the micro condo. And
micro condos, the definition of that, guys, is under 300 square foot, right? The entire condo under 300 square foot. So here what we have on screen is a bed. What we have on screen here is a adjustable wall, which can be pushed out, and behind it, you can create a workspace. So for the work from home situation, here, I guess on screen, we've got a marketing company who is marketing this on screen. If you could pause that, Gary, I don't know if you can. But what you're seeing there on screen is, I guess, a redefinition or a reinvention of the old Murphy bed. And the Murphy bed used to fold up into the wall. But what you now have is you have this platform, flat platform on electric rails at the back there, so that during the day, you push it up to the ceiling, your entire bed just rises to the ceiling, effectively disappears, and during the day, in the evening, it comes down. And I guess that's a student who's talking about the benefits of living in that small space. I think that's probably enough for us, Gary, there. But the idea that one space can represent two functionalities is something that has been around in Europe and in Asia for the longest time, right? I might have mentioned I lived in Japan. I lived in a apartment that was 210 square feet. And during the evening, we would roll out our futon and put it in the living room. And in the morning, the first thing you would do is roll up that futon and put it in the closet, which would then create your living space, right? So this is the next version of that, which is you don't have to physically do it. It's just push a button, the bed disappears, and the bed head transforms into your daytime sofa, right? So it's kind of cool, I think. And the choices for people going forward would be, okay, do I rent a room in a place, or do I potentially buy a condo that's of this size? Now, let me talk to you about the lending on these, Gary. There has been, for the longest time, a big stigma. In fact, whenever we get a purchase agreement that comes into our mortgage brokerage and it's under 500 square feet, we have to reconfirm with our lenders if they are okay lending on a property of this size in that location. Sometimes different lenders have quotas as to how many small units they would take on in a particular development, right? So, because they don't want too much exposure to that. Certainly, if it's under 400 square feet, that comes under more scrutiny. We have, in fact, this year funded a place that was 358 square feet. So, that's small, but I've never funded anything under 300 square feet. And I guess they're basically putting their toe in the water here and saying, putting this video together really for the public and for government to say, hey guys, I think this might be the way of the future, but we need government and banks to come on board to accept that this is a reasonable and marketable place that people can actually reside in. So I think that's the reason that this video was put together.
Yeah, no, this is good. And I have a couple of excuse me, couple of thoughts on this. And the fact is, I first thought of the cruise ship cabin, because that's
right.
Some of the cruises I've been on with my kids.
They do this on the cruise ships?
Yeah, the kid's bed was in the ceiling, and it would come down when you're ready for.
Was it on electric rails like this one?
No, this was not. Well, maybe they are now, but was not as fancy. Yeah,
sure.
And we've all stayed in hotel rooms.
Yep.
Really, the size of a hotel room with a kitchenette and this, right? We've done that, and I think this is probably a viable option for some people. It won't be for many, but for some it will be, right?
Well, and we say that, Gary, but I think that if we look at family formation going forward and also family breakup going forward, the number of single people in the world, in my humble opinion, is only increasing and going to increase, right? And so we don't need mega properties. These people who are going to be single for a lot longer, the marriage age, at least, I feel like 20 years ago, everybody's getting married under the age of 30. I feel like now it's almost everybody's getting married over the age of 30. Where do they live in that 10 to 15 years where they're single, right? Could very well be in a place like this. And then the divorce and separation rate is over 50%, depending on who you ask. Where do those people go after, separating assets? Many of them are buying condos. I'm helping divorcees right now buy condos. And this may be a viable option for them.
Yeah, cool. Okay, so speaking of buying and affordability, let's move over to the article that you sent me here from Canadian Mortgage Trends, and this is all about, to set this up, the I don't want to use the word chances, but what's a better word than that?
Yeah, it is. It's the likelihood. Yeah,
the likelihood. That's exactly it, of someone owning a home, really depending on their their environment, right?
Correct.
Yeah. Okay. So let's share the screen here.
So really what this article does is it highlights a study that examines people basically between the ages of 20 and 30 years old, so young adults, and the chances of them owning a property in today's world. And if we look at this graph here, what you see is a graph with the bars increasing in size. On the far left, what we have is a small graph that shows 8.1%. What that is it shows that 8.1% of 20 to 30-year-olds own a property if their parents were renters. Okay, so if your parents did not own a property, then the likelihood that you own a property before the age of 30 is about 8%. Okay, now as we step over to the next bar, what you see is this represents people aged 20 to 30 whose parents owned their own home. So just the parents owned their own family home. The chances that you own a home be under the age of 30 is 14.7%. So quite a significant jump, right? The fact that your parents owned a home means that you're more likely to own a home yourself before the age of 30. The next graph, the next bar, is if your parents, in addition to their home, owned a rental property, and therefore the chances of you owning are now 22%. And the next one is, okay, if your parents owned more than three or more properties in total, the chance of you owning a property under the age of 30 is 27%. So all this goes to show that if parents own property, you're more likely to own yourself. And the more property they own, the higher the chances that you become a homeowner. And I can tell you, Gary, that I've been talking about this with my clients for 20 plus years. And the reality is that these people are going to be able to help their children buy. And that's what really points to the reality of, in that, why is it that these people are able to buy? And I feel like it's because their parents come from a stronger financial base, which was built in real estate ownership. And it's much easier for these parents who own 2-3 properties to write that check for 200 grand to their 25-year-old to help them buy, or pay for the down payment on their first investment property or their first family home.
It's funny because when you first showed this to me just before we started our show today, I kind of always assumed this was the case, but I'd never really seen it laid out like this with actual data points. And I'm excited for my own children because obviously we and I both own investment properties. But if I think back, so did my parents, right?
There you go. Yep.
Story, when I was young.
And so did mine, by the way. Yeah.
Right, exactly. And maybe like you, when we were teenagers, you were sent to homes to go paint and cut grass, and these were you lived on. And you're like, what the heck? But it's interesting. We are who we become because of the environment we grow up in, and this is one of those ripple effects as well, right? And
correct.
And not to say if you grew up in a household that didn't own investment properties, that we're not saying that you should never own an investment or you never own a property yourself. This is just that likelihood, as you pointed out, and parents. Every parent values things differently, and we should probably talk about how parents are helping their children buy homes as well, Dion.
Correct. Yeah, we should. But before we leave this graph here, Gary, what I want to point out is the people who are helping their children buy are the same people, and I'll talk directly to the listeners here. If you're the type of person who will move into a particular neighborhood because it's within the school district that will be best for your child, it's the same type of mentality that people are using, decision-making process that people are using to buy investment property, because they know that when their child is 25, they're going to continue to need that type of help, right? So if you're that type of person, understand that getting one extra piece on the chessboard, one more piece of real estate, means that the chance of your children becoming that homeowner in the face of all the affordability issues we'll talk about here, it means that you are definitely going to give them the same leg up in the same way that you did when you moved into that right neighborhood so they can get in the right school, right?
Excellent. Okay, so you sent me a chart, or really some insight here and some numbers on what it looked like from a couple of years ago to where we are today with interest rates and payments and income required. So to walk us through this.
Sure. There's a lot of data here, guys. So let me just go through it line by line. At the very top here, what I'm modeling is a purchase of a $750,000 property. Let's just call it a townhouse. Minimum down payment, $50,000 with a $700,000 mortgage. I want to point out, though, there is mortgage insurance applicable here because we're putting down less than 20%. So you're borrowing slightly more than 700 grand. Okay. Now, when we look at the 2022 numbers, what we have here is the contract rate. That is the rate at which you're going to borrow money at. That's what you're going to sign on the contract with your mortgage commitment. Back then, we could get you a fixed rate at around 2.5%. That monthly payment was just over $3,200 a month. And the qualifying rate, that is the stress test, was at 5.25%. Okay, meaning that even though you're borrowing at 2.5%, they test your deal as if you were borrowing at 5.25%. Right, that's the stress test. And so back then, you needed an income of about $135,000, right? Which, with a young couple who have double income, that's about right from what I'm seeing on mortgage applications today. Okay, so that was the situation in 2022. In 2023, that contract rate jumped to the highest it's been in decades, which was at around 6.5%. Okay, the payment jumped from $3,200 to $4,800. That's a $1,600 increase, about a 50%, 49.5% higher payment. Okay, property market came to a standstill in 2023, and the qualifying rate, to be clear, whereas before it was 5.25, it jumped to 8.5%. Okay, income required jumped from 135 grand to $180,000, 41% higher than just the year before. Okay. Now let's bring us up to today. Today, the contract rate is at around 5%, which means you're borrowing at just over $4,000 a month as a payment. It's decreased from its peak by about $800, which is great. The qualifying rate is 7%. The income needed is 160,000, so it's dropped from that 180,000 that was required in 2023, but it's still a lot higher than the base we use at the top there of 2022. Okay. And now let's look to the potential future. Now, many people in my industry, Gary, are hoping, wishfully hoping for interest rates to start with the number 2 or the number 3 very, very soon. I like to be a little bit more realistic around this. And so when I'm projecting a year or 2 years from now, I say, look, let's model on 4%. And just keep in mind that would be 4 rate drops of 0.25% each. The likelihood of us reaching that prior to the end of this year is small now, based on the fact that we're nearly in June and we haven't had one rate drop yet. Okay, so let's assume 4% sometime next year. If we get to 4% as a contract rate, then your payment drops to just over $3,600 a month. It's a decrease of $389. Qualifying rate is 6% at that point, and the income needed is 145. So if we look at that very bottom number, 145 grand, and we look at the top number we needed in 2022 at about 135, then we're not too far off where we were in 2022. And I'm not saying it was easy in 2022. But what I'm saying is we might be returning to what we had in 2022. And I think that 145 number, Gary, is probably more realistic in terms of, a young couple trying to buy their first home. Problem is, and you and I both know this, when rates drop, this townhouse, which is at 750K, is likely not going to be priced at 750 anymore, right?
Yeah. And that reminds me of one of your lines that you often like to say, and it's now becoming one of my favorite lines, is you want to date the what, Dion?
Yeah, so marry the price and date the rate. So this is really one of those scenarios, and this is it in black and white. It's a real estate is a journey. It's not a straight line. And interest rates in particular are things that can change. Now, I don't want to be the guy to say, hey, yeah, guaranteed it's going to be 4% next year. But the likelihood of it being at 6%, 5%, or 4%, if I had to bet, I would be betting that we'd be at closer to 4% than 5% where we are today, 12 months from now.
Yeah, no, this is good stuff. And we share this insight and have thoughts on different videos and things like that because selfishly, it keeps us really engaged with what's going on in the markets. And these are questions and comments that our own clients are bringing to us, and we want to make sure that we are guiding them along. Not this.
Gary, I was going to say, just on that affordability thing, and before I forget, some of you might be saying, well, I don't make anywhere near the 135 grand or 145 grand, but I know I can make that payment. Okay. And so for those people, as it relates to parents, we're seeing a lot of parents help multiple ways. Okay. One is we're seeing them co-sign. So lending their income to the application. The other thing is we're seeing them gift money. So they're gifting 100 grand or 200 grand for down payment. The third is a combination of those things, right? Where the parents are co-signing and or gifting. The last thing, which a lot of people don't think about too much, is helping their children with elimination of outside debts. So earlier we talked about that car and the car payment, right? And that car payment might be $700 a month. which is about the average car payment in Canada right now. If you're going to go get a car payment, that robs your borrowing ability over 120 grand, maybe a little bit more than 120 grand. So what we're seeing is parents sort of pay out those smaller debts, the smaller car payments, which sometimes then open up enough debt serviceability for the child to buy the property themselves. So like I just laid out a couple of things there where a lot of people don't really think about, okay, what are all the ways in which I can use my resources? And your resources aren't just your income and your down payment, but also your family network and how you can get those things to work together to help you buy and deal with that affordability and qualifying situation.
Well, you raise an outstanding point here, and I know this video. There's a lot of great points. However, we often think, well, maybe mom and dad can provide us with $15,000 or $20,000 or even $30,000 or much more into the hundreds for the down payment, and we think that extra $20,000 is going to help with our down payment. May have a bigger impact to pay off that car loan. That's what you're saying, right?
Correct. So let's crystallize that. Let's say you got a 20 grand car loan with a $600 payment. Okay. Because you have that $600 payment, your borrowing power has diminished by over 100 grand. If your parents just gave you 20 grand to pay off that car, you've just boosted your borrowing power on the mortgage by 100 grand. So that's a huge return on investment in that example there.
Yeah. And you might say, well, I still have to pay my parents back or things like that. There's ways to do that where, it's, you're not registered something on, you don't have a loan or a lien or anything like that. There's ways to send money back and forth in a sense that takes care of mom and dad, right?
Correct. Yeah. I mean, obviously you can come to your own agreements, whatever they may be. But in the same way that sometimes I get clients call me and say, Dion, I signed for my cousin's car. It shouldn't impact me. I'm like, well, it's on your credit bureau, so it does impact you. So this is the reverse. Get it off your credit bureau somehow so that it helps you, right?
Yeah, very good. Lots of great stuff today. Longer video, but important information as we walk our way through our changing environment here. And as Dion and I both kind of said off the top here, we are a little just cruise control into the Canadian market, which in my opinion provides some opportunity, whether you're the seller or buyer. So if you've been sitting on the fence on both sides, reach out to us because there's some interesting opportunities that are coming up. I'd rather be, working in the market than observing the market and waiting for something kind of crazy to happen, because I think that's what's going to happen. The moment we hear interest rate drop for the first time, we're going to see a flurry of activity. So you don't want to compete against that, in my opinion, Dion.
Yeah, I mean, we're all waiting for that time. We're going to have a different problem in a couple of weeks or a couple of months from now when this eventually happens. If you can get in front of it, you should.
Yeah, very good. And getting in front of it means talking to Dion and making sure your finances are in place. So when you do see that right property come up, it's just a matter of signing the purchase and sale agreement, and the mortgage is already, all the groundwork and the backwork has already been taken care of. It's just, it
Correct.
makes the process so much easier. Remind us how to get a hold of you.
Yeah, so it's kangamortgage.ca or on Instagram at the Dion Beg.
There you go. So that's Dion Beg. I'm Gary McGowan. We'll see everybody in the next episode. Goodbye for now.